Okay, we're very honored to have our next guest, our next presenter here today. We have Ed Tilley, who is the CEO and chairman of the board at the Cboe Global Markets. And interviewing Ed is Julie Bauer, she's the Chief External Relations Officer at OCC. We're back on schedule, so thank you very much. So thank you for being here. Have a great conversation.
Awesome,
All right,
thank you.
All right.
Mm-hmm.
Well, Ed, it's nice to meet you. So we're going to try, as you and I talk, to talk about some things that are not right down the middle of regulatory issues and other things that are happening today. And I guess for the start, I'd like to step back a little bit. This is, next year actually is the 50th anniversary of the options industry. So your organization, my organization,
That's right.
It's a pretty big moment. And maybe we won't talk about how many of those 50 years we've been involved in it, but when you think back to how you started in this industry when everything was traded in the pits, and I know Cboe's recently opened a new trading floor, and but during that time there was a really interesting environment, and I learned a lot from it. There were a lot of new people coming into the industry and really being apprentices in some ways of some of the more experienced traders. And since you remember those days, and now you've been at Cboe all this time to where you're expanding globally and have done all these mergers, talk a little bit about your journey there.
Sure, I was one of those that was able to be brought up from a clerk to a trader, market maker, and then involved in the exchange space. And it is something that's changed in the industry, and the interaction in bringing someone with absolutely no experience, which was the way I came up, and learning besides someone who's been there and done that. I think generationally, and if we look at the evolution of this incredible industry, that is a piece that's missing. And from, I think, most of my exchange competitors and friends, we had to begin internship programs, and they're very, very powerful. I think the difference, observing the trading floor when I was there, everyone looked like me. And the world that we're in now, the benefit of the world and the changes, people don't look like me. And that's an important aspect of the change in 50 years, and internship programs, of which we are very involved, as many in the room are, is a way to bridge that gap. And what was just a natural progression in this business is to start at the bottom and able to work your way up.
Right.
We've tried to replace that experience, and I think we're doing pretty well.
So picking up on that, let's talk a little bit about diversity, equity, inclusion, ESG. I know that Cboe is doing a lot in that space. I know that you have very targeted programs, particularly on the diversity front. And I know really just in the workforce today, a lot of employees or potential employees really demand that. They really want to know, what is this company doing in this space? So talk a little bit about what you've been doing. Sure. and what all's driving that.
Yeah, I think while ESG gathers, and everyone has a different opinion and can define ESG a little bit differently, I think S&G will be pretty much table stakes and really not a big topic of conversation, I hope, pretty quickly. It just is how our associates will demand of us who lead the Cboe, and I think I speak for most people in the room. It's very easy to get your arms around what that means with a DEI perspective. Whether that's very focused today, because little changes today have a rippling effect on how we're able to promote and expose those that have not had the exposure, especially in this industry, will just become, I hope, commonplace. What I think we'll be talking about for years to come is the E, or a more particular climate, and the impact. We chase the world. We have a perspective in running global exchanges, the difference the world has attacked the problem of climate and environment, and we're playing catch up here. And that will have a longer tail, I believe. But to your point, Our associates for sure will hold me and the leadership team accountable for having us represent the global community both in leadership and in our hiring practices. So that's a huge focus now. And as I say, the little victories we have today will pay off for years and years. I think the other aspect of ESG, and this is a highly regulated environment, is what position our regulators will hold our feet to the fire on disclosures. And like unfortunately, most of the conversations with regulators on ESG is, then I'm going to look at enforcement, I'm going to look at what you've written, I'm going to look at how you've disclosed this. And I think principally based and directionally focused is really the best place to start and how we all benefit.
So let's shift a little bit to Cboe itself. Cboe Global Markets, you're in lots of places, you've done a lot of acquisitions. Talk a little bit about how you think about that, how you decide what is next, and how the lenses that you use to determine how to expand.
Yeah, sure. So over the last 2 years, primarily through COVID, we've had 9 acquisitions, which is in hindsight very, very aggressive, and really focused on building a global network and to operate trusted markets. Our customers, you've heard participants all morning and yesterday, this is a global world and boundaries are shrinking and the trading day is expanding. We do operate around the clock and around the world. And it's a pretty interesting perspective. With those 9 acquisitions, we find ourselves running 26 markets with 18 regulators. So while we think this is a challenging regulatory environment here, the bifurcation with the CFTC and the SEC, while not always clear, there's a global theme in regulation. And at the end of the day, it is customer protection and really mindful of how we innovate in a responsible way. So long answer to, we look at the globe, anywhere where we can compete, we want to have a presence. We enter that marketplace with asset class and geographic expansion in mind and want to leave or present for our global customers a common experience, a consistent experience in a transparent market. We are also very interested, and we think we do quite a great job of leveraging a common technology stack. So Chris Isaacson and the team insist on hardening our own systems and bringing and migrating them to all of the jurisdictions and exchanges that we run, so that our customers know when they see Cboe, important when I define customer, retail, institution, our liquidity providers who are so important, know that they can count on an experience that they become used to when they see Cboe.
And at least domestically, there's a lot of requirements and oversight particular to what I would call market infrastructures, exchanges, clearinghouse, et cetera. Do you find that there are globally sort of that extra layer of magnifying glass on what you're doing, how you're doing it, and in terms of your posture interacting with 18 regulators, I think you said.
Yeah, it's great. So I just came off of a WFE, World Federation of Exchanges, had its General Assembly just a couple weeks ago, and it's every global exchange. So all of the exchanges here were represented. And the theme is pretty consistent. It's really market resiliency. That is the responsibility when all of us take up the obligation to run exchanges. And so that theme is pretty universal. Regulation across the globe is consistent in that regard. It is worth the investment. It is worth the redundancy. It is worth the control functions at governance levels in each and every day. It's worth the hours that we spend contingency planning. So in the event that we saw 2 years ago, when the world changes in an instant, we are able, all of us, to operate a transparent market where different opinions are able to be expressed in a transparent way. So that is very common across the globe and not unique to all of us in the room. And I get a great deal of comfort on that, because our perspective is the end user at the end of the day, as I say, institutional, retail, and super important the liquidity provider.
So that makes me think a little bit about your team, and I always say, you've heard me say, I have a soft spot for exchanges and self-regulation. I know it's a big responsibility, and there are a lot of people that it takes on a day-to-day basis to make sure that everything's working and ready to go. There's always people working sort of overnight. When you talk about trading around the clock, what does that look like?
So the lessons learned in expansion in a short period of time, and we always go back, gosh, what could we have done better? I think preparing for the assumption that if I've done it in this time zone, and we've been in more broadly across Europe for quite some time as a result of the BATS acquisition, but expanding in APAC, it is truly amazing what we've asked of our team, and the way people show up and rise to the occasion has blown me away. It is absolutely amazing. We've asked a great deal from a number of people who we charge with keeping these markets going. It is a monster lift, but I think the shared North Star in this is, at the end of the day, listening to the customer and delivering for the customer. And that gets you a long way, and the team around the globe wants to deliver that, and it's just been fantastic to watch.
Yeah, and I know to take on that and oversee that, there's a real commitment to public markets. How do you think about public versus private markets?
The great debate, public versus private, and both have a purpose. As much of the debate here, off-exchange trading or lit exchange trading, all have a purpose. We are obviously in the lit capital formation price discovery business. From their ancillary liquidity is able to be farmed and sourced so that all participants in the market can represent an opinion. We're very much in favor of that. The caution, and what we'll spend a great deal of time on over the years, is the arbitration between the levels of regulation in each. And so the white papers we put out on the topics that are being discussed each and every panel here today are just making sure that the playing field is level, and that where price is actually formed in a transparent way is not at a more heavily regulated venue than off-exchange and single-dealer platform, for example. Every one of these platforms has a place. Evening out and looking at the arb between them both is really what our white paper is in the direction we'd like to travel. I've done all that without a Doug Sifu F-bomb. That's pretty good. I think that's very good. I know. I'm not prepared to do that yet.
Okay.
That said, old floor trader would have come really naturally, but I'm still.
Okay. Well, we still have a little bit of time, so we'll see if we get there. Well, let's shift again back to U.S. markets, and obviously options have gotten a close look since the meme stock, the GameStop, all of those things happening. But I know there's some other interesting trends we're seeing, different ways that people are using the markets. So talk a little bit about what you're seeing among your customer base.
Yeah, it's great, and Geraldine did a great job on the last panel. It's great perspective, and if I take the almost 24-hour exposure to the markets, I get the Webull perspective. That is what we're building for and preparing for, and our first foray is extending the trading hours in our proprietary index complex. So that would be the S&P 500 for us and VIX. We do see a build and an interest to represent opinions around the clock. So that is growing. I think Steno said it was about 1%. We find that a little higher now in this market uncertainty because we are all connected. Something happens overnight and risk transfer needs to continue. Right. But I see that trend, and ultimately I agree. I don't even think it'll be 5 years that customers will be able to represent their opinions around the clock. The other phenomenon that is remarkable is the focus on super short-dated exposures of the macro U.S. economy expressed in S&P 500 terms. What I mean by that is we've extended to daily expiries, and that is the fastest growing product extension we've ever had. And so weekly options represent about 60% of the SPX volume today. SPX is up 30% in volume year over year. And the dailies, the options that open and close today, are about 40% of that business. It is absolutely amazing, the flexibility and the desire to express opinion on the same day that an option expires. And in this market, it makes perfect sense. We had a CPI number out this morning. Market opens down 60, it goes down to 40. I mean, those are monster moves. And having the flexibility to get in and out of a position or leaning on an expiration in a cash settled option in these markets has found great utility off of what we would deem more retail platforms, not institutional platforms. So it's an incredible phenomenon. You've seen it at OCC and clearing.
Yeah, I was going to ask about that. Do you see that spread? Do you see that happening in orders of all sizes, or are you seeing it more on the lower end?
Some are algorithmically driven, so it's a little difficult to see what the parent order looks like. But as I say, they're primarily coming off of more retail platforms and not on the institutional size of the institutional platform.
Yeah.
Whether or not that changes, I don't know. And that, to be clear, that is not at the price of the third Friday or not instead of trading third Friday. That's remained relatively consistent. It is really in addition to.
Okay. So that brings up an issue that raises its head periodically in this industry. Obviously, market makers are critical to making these markets work. And there's a lot of exchanges now, and there's a lot of products. And what are you seeing in terms of the ability of market makers to continue to be involved in all different segments?
The innovation and evolution of the market maker is absolutely amazing. Having been one that was able to keep track of about 5 stocks, and now and traded in fractions. If you think about those debates we've had over the years. And the derivative side, the importance of the market maker in a global sense has never been more important. We're very mindful before we enter into a jurisdiction that if we bring what we promise to bring, and that is basically technology and regulatory oversight compliance in a trusted market, will you show up? And will you commit to deploying your very precious proprietary capital in the products that we list, whether they're equities or derivatives? And when the answer is yes, we go forward. But it is that ecosystem, customer, institutional, and liquidity provider that is so very, very important to us as we're evaluating where to go next. And the role of the liquidity provider has never been more powerful. In running more equity markets than derivatives markets across the globe, that has been our experience. It is remarkable, the evolution.
Yeah, it's really stunning when you think about it. I mean, that it's with so many different markets going on, how they're able to rise to that need. Yeah. So as we see more and more retail investors being interested in options products and, of course, the other products, I know that one area that you've prioritized, and we certainly have as an industry, is investor education. We have a lot of content that we've done, a lot of outreach, and I think it's never been more important that people really fully understand how the products work, what the potential benefits are, what the risks are. I know that Cboe has invested a lot in this area, so I'd love to hear you talk a little bit about what you're doing.
So education, we partnered obviously with OCC over the years for the retail customer and really seeded that education probably about 10 years ago to OIC, which has done an incredible job on the basics. And we focused on institutional knowledge, more institutional strategy in our education and offering. And we're going back now to the retail investor as they have changed the information flow, the access to the markets really in their favor. The experience so good that education, we think, we needed to get back in the education game and are doing so in a big way. So the education is first, and then product design for the new retail investor. We heard Q up this morning talking about new investors and the millions of new investors, their first experience over the last couple of years. Webull same. We need to design products with those users in mind. They have smaller accounts. They want access to the equity markets. They want access to derivatives markets, and teaching that sustainable investment and strategies, we think, is part of the responsibility of being in the business of running a market and being in the business of listing products for their consumption.
Yes, in fact, the Options Industry Council celebrated its 30th anniversary, I believe, just the last month maybe. So we've been doing it for a long time as an industry. Certainly we've evolved it from the old, reading on the screen and in person. We still do a lot of in person, but a lot of it is digital now, and we've never seen more demand.
Yeah, we're moving into the on-demand education, which is, we think, consuming and being educated. Like, I think the app description from the last panel is perfect, right? Everyone needs to be able to open their phone, and for us, we think you should be able to do so and choose the time and place for your education.
Right. And we see people really, there's just a lot of take up on that.
Yeah.
And I think you see it, and I think our colleagues, at the retail firms, brokerages are seeing it too. I feel like there's just a lot of demand, and it's great that we're able to step up and modernize and have it available to people as they need it.
We're totally aligned with the comments from the first panel of the morning. None of us are in the churn business. We're in the sustainable long-term investor business, equities and derivatives. And with that, we place much of the hopefulness around being in that business for a long time on education.
And Ed, is that something you're doing globally in all of the areas that you've expanded to now?
The demand, again, having just come from WFE, the demand around the globe in trying to take the good, and there's tons of it in the US market, among them education, and the demand inbound to our Options Institute to be a provider for education, both in equities and derivatives, has never been greater. So how we move into that business and the speed at which we move in is really regulatory and geographically customized, but I will tell you the demand is in every market that we're in. And this is the model. The US market, there's nothing like it, and we're going to beat ourselves up over proposed changes. And at the end of the day, if we keep our customer and listen to our customer, at the end of the day, we're going to get incrementally better, but it's that listening, and it's data-driven and orderly change to market structure, I hope.
Right. So you're publicly traded, and I'd like to hear, what do you hear from your investors? What are your investors clamoring for, or what types of expansions get the most, attention from your investor class?
We're very, very transparent, and so the investors want us to stick to our core business, and that core business is matching buyers and sellers. Some of our exchange counterparts are moving away from the more traditional matching buyers and sellers. We've focused on that, and as a result, been able to enter other geographies differently. Equities usually the first point of entry. Our investors understand that. They also know, as a result of operating in all of these markets across the globe and different asset classes, our data set is very, very rich and originates from the interaction of buyer and seller. So another fast-growing business of ours is and resonates with our investors, is just the richness of the data set and the uniqueness that Cboe has to offer in all of the major markets of the world.
So take yourself back to where we started, talking about you starting off in the pits, learning from people. When you look back now everything that's happened since then, sort of what is the most, maybe, what are you most proud of in terms of how Cboe has grown and changed and adapted? And maybe what has been the most surprising thing that version of yourself would be amazed
Well, I think
by?
there's a lot of versions of the guys I went and grew up through the business with here. And what I think most of us have in common is just willingness to change and evolve and innovate with I think just the most incredible industry. So I'm not unique in that respect. We all want to learn. There's nothing recognizable here than if we were sitting in this room 15 years ago. You can't imagine. I could never have imagined what we as an industry would have been able to continue to grow. So I'm really proud of being part of this bigger story, not just in the U.S. now for Cboe, but in a global story. So that's been just absolutely amazing. I think the surprise coming as a floor trader, you eat what you kill. That's it. Yeah. And building a team and the incredible input. I have the most incredible management team and global group of associates. We would accomplish nothing of this if we didn't have trust and a common goal. Floor traders don't think like that. It's how sharp can you how can you get in front of the other guy, right? So that's been great. I'm really surprised in how much I've learned from just being surrounded by smart people in Cboe and the industry. It's just been terrific.
Right. I think about this more now than ever. I think how it's really a group project, keeping these markets up and operating and meeting all of our marks and doing what we need to do for the investing public. An exchange can't do it alone. A clearinghouse can't do it alone. It takes all of us, and I think there is a lot of partnership and working together, not just within our organizations, but across the industry to make that happen. I think that's something that is invisible to a lot of people and observers.
And can be. That's okay.
Yeah. But it's really gratifying to be a part of it.
It is.
All right. Well, I see our time is ticking down. So, are there any other? Is there any sort of advanced look at Cboe's next shopping trip, or
that's outstanding.
any tidbits you want to tell us?
Non-public material information, perfect spot for
any
it.
palace intro? No.
No, nothing new.
So as you're looking ahead, you said you've what, 9?
In 2 years.
9 and 2 years. So do you see a break coming in that?
Well, we're in a break. We haven't announced anything for just about a year. So we're in full integration mode and technology migration mode. We worked the team, overextended the team in what we've asked. They'd over-delivered. So rest is the wrong word. We don't rest, but executing on the promises we made to investors, regulators, and shareholders is the mode we're in. But our eyes are always open for opportunities to compete.
Great. Well, you've done a terrific job at Cboe. You've had a great career, and thanks for talking to us
Awesome.
here today.
Thanks. Good to be here. Thank you all.
Everybody,
Jim, thank
Ed
you.
Tilly.